In terms of just the overall macro picture, it sounds like you believe that despite some reemergence of inflation, growth won't be a problem. So you're not concerned about stagflation.
No, I think the economy is pretty good, and I think they're going to run it pretty hot. And yeah, I see the stock market is good, right? And asset prices are high. Christmas should be good. Employment is good. Wages are up. I don't know, unit labor costs are up 3.5%. And I think there's 2% of productivity on top of that, which means that wages must be up 5 or 6%. So, obviously not each person is in a great spot, but collectively, this should be a pretty strong economy.
But in your latest letter, you wrote that by most measures, it is the most expensive stock market that we have seen since the founding of Greenlight. But it sounds like you're not outright bearish. So what does that mean for your gross exposure?
Yeah, we're not outright bearish, and it is the most expensive market of all time, as far as I can see, or at least since I've been managing. There's plenty of businesses that are pretty ordinary. They grow GDP or GDP plus 1 or 2, and they're trading at, 45 times earnings and stuff like this. And then there's other businesses that have a little bit more excitement than that, and they're trading at, 45 times revenues and things like that. This is a really, really, really pricey environment, but it doesn't necessarily make me bearish. Asset prices can trade at the wrong price, and they can trade at the wrong price for a long period of time. A few years ago, we had trillions and trillions of debt around the world that was trading at negative interest rates, which of course made no sense. It didn't make sense then, but just because it began trading at negative rates didn't mean it couldn't persist for several years. Now there's very little debt that trades at negative interest rates. So if you bought and you held all the way through, then you probably have like a bad outcome, but you didn't know if this was going to be, 3 years of negative interest rates, 10 years of negative interest rates. So an overvalued stock market, that's not necessarily a bear market, and it doesn't necessarily mean it has to go down anytime soon. And so I'm not particularly bearish. I can't really see what's going to break the market at this point. Not that you always can, but there doesn't seem to be anything obvious to me. So I just observe that it's a really expensive market, that if you buy and hold for a very long period of time, I doubt that this is you'll look back and say this was a great entry point of all of the entry points that you could have. But that being said, there's no reason why the market can't continue to do fine for a good period of time.
What does that mean for your appetite to hedge?
Well, I try to manage most of the portfolio from the bottom up. So we find a few things that we still make sense. I think the market has companies that are literally, hated and forgotten about and stuff like that, and they trade actually at reasonable values. They're just not exciting, and you probably don't want to talk about them very much, on your, on CNBC and stuff like that. And, they're not necessarily going to go up in the next, day or month or something like that. But there are things that are truly despised and hated and cheap on an absolute basis that I think makes sense to own. And on the other side of that, I think there's plenty of things that are probably overvalued and deteriorating that we can use to be a bit more cautious.